On today's hot sheet, I'm discussing the rental market report for December. Home prices rising in every major metro right now, and mortgage application data for the past week. Today is Wednesday, January 22nd, 2025. I am Byron Lazine, and the hot sheet starts now. Good morning. Welcome into the hot sheet today. Let me know in the live chat which market you are tuning in from. Pleasure to be with you guys here today as we dive into what I believe is a trend not being talked about enough in the housing economy. This is a Realtor.com report, renter report for December 2024. Now, a full year of data is in on what's going on with rentals. Somebody send it to Jerome Powell's desk, please. We're going to hit that. Home prices might be surprising you how they're starting the year. This would definitely go against yesterday's executive order that we talked about, trying to push home prices down. This information that we're getting on where home prices are heading, they're not going down. We're going to talk about that. And is there any silver lining in what we're seeing on mortgage application for the spring market, all of that. But first, reminder for those who haven't signed up, today at 3 p.m., I will be hosting a webinar alongside Matt Curtis and an expert from Zillow on exactly what we need to do to get listings in 2025, the new way to get listings in 2025. And just for some I'm pulling this right out of Zillow's actual their quarterly earnings. They can't lie in those things. Zillow is searched more right now than real estate online, 3 times more than realtor.com, and even more than that than Redfin. So knowing exactly how to take the data, some of the data that they're having, that's why we've got a Zillow expert on here, and apply that to that listing conversation. Every seller we sit down with uses Zillow like it's the word Google when it comes to houses. Being able to talk about it and not just go into being able to talk about the stats and the data on, that's coming from Zillow, like we do here on the hot sheet, and not walking into a listing appointment to take a dump on the biggest brand embedded in a consumer's mind. There's a very unique strategy right now that's helping agents just go and get those listings signed. So a new way to win more listings in 25. Links down below. Totally free webinar. It's worth having the information at your fingertips. More information, you come in and separate yourself on a listing presentation. Everybody's talking about, photography and this thing and that thing, and very few are going in with stuff already done for the seller, already having gotten to work. And so we're going to cover that today at 3:00 webinar. Myself, an expert from Zillow, and I got Matt Curtis, who's got the #1 team in Alabama. It's an independent brokerage. He's got probably, let me show you something just as a teaser here, getting into what Matt Curtis does. Matt Curtis is somebody who has one of the best well-run email newsletters in the game. I mean, this guy absolutely crushes email newsletter, independent broker, and he's doing such a good job. So today, 3 links down below. All right, let's get into this Realtor.com report now. This is the December 2024 rental report. And what we're seeing is a continuation of what we've seen all year. Haley, Haley, am I back? Did I disappear? I hope I didn't, but
You're back. You disappeared for a second, but everything's okay now.
yeah, everything kind of just blew off my monitor screen in front of me. All right, back. Sorry about that, guys. So, just taking a couple steps backwards here. This rental report, if you've been following the hot sheet for some time, first, thank you. And we have been pretty much for 2 years now saying the new construction is going to start to outpace demand. New construction on multifamily, when rates were so cheap, everybody wanted to get into it. All the developers wanted to rush in to building multifamily. It's a phenomenal asset, those large unit buildings. And the money was so available and so cheap to borrow and finance these projects. And so we knew at one point that new product coming to the market eventually was going to shift to, having more supply in these areas, Tampa, Austin, these different areas, than what was needed at the time. And that's actually now what has started to happen. This new construction on the rental side, the multifamily side, has started to outpace demand. It's one of the reasons why you're seeing these rental prices move down. The main reason why you see rental prices move down. And it's become so much more affordable there's always the disclaimer, on a year-to-year basis. If you're just matching 12 months versus 12 months, right now it's more affordable to rent than it is to buy over the next 12 months. So if somebody's making a shelter decision for just the next 12 months, not the next 10, next 12-month decision, yeah, it's way more affordable to rent. And these prices have become ultra competitive, right? So rents decline again. Nationwide rent right now is 3.7 below the 2022 peak. And we're actually in the negatives still here today when we look at year over year rent. Okay. So really doing well in terms of getting those shelter prices stabilized as it relates to how we're fighting inflation. Now, are we seeing this type of an impact show up in the CPI? No. Why? Jerome Powell has consistently told us the data that the way the Fed and the FOMC calculate this data is lagging. It's as many as 2 years to catch up to what we're seeing. Now, we've seen this for a year. And so hopefully here in 2025, we can start to see this data catch up. Smaller units saw larger rent declines. So you saw the studio and the one bedroom see a bigger decline than what you're seeing on two bedroom. Two bedroom, not as many of those that are built in comparison to a one bedroom or a studio, historically speaking. And you have demand there, just like on single families. When we're looking at the overall rental market declining, single families, certainly in areas where there's not a lot of multifamily, probably haven't seen a decline. You're probably saying, hey, my market that, we're getting really good numbers. They're going up single family, very desirable in areas where you haven't seen a lot of this multifamily construction. You're going to be able to push prices up as well. Here's the national rents by U.S. size. And these are full year numbers. It's the December report. So these year over year numbers are the full year of 24. Overall, down 1.1%. Jerome Powell, wake up, pour yourself a cup of coffee. Check out that number. Studio, 1.3% to the negative. One bedroom, 0.9% down, and two bedroom, 0.9% down. You look over the last 5 years, the two bedrooms are up 20%. And the studio being the smallest gainer at 11.3. Overall, over the last 5 years, you see a 16% increase. Again, we're 3.7% overall below the 22 peak. So even, that peak number has come down. It's cooled off a bit. That's where we're at year over year. The two bedroom right now is $1,880. I know you look at Boston, you're going to say, no, that's not the case. Or you look at some other areas. No, that's not the case. This is the average across America. Okay. So that's where we're at there. By the way, all the charts that we're going over here, BAMX members, grab those inside of BAMX hot sheet show notes, obviously available for you for your use in your market, on your show, in your database, all that kind of stuff. All right. Declining absorption rates for newly completed apartments. And this is what will ultimately push price down more. I mean, when we were in 22 and 21 at this level, we were, 22, 23, we were talking about that right here on this show. 23 for sure. I don't know, the show might not even start till 23, but 23, we were talking about this because of the 21 and the 22 data, right? The absorption rates for newly completed apartments is starting to move down. That's pushing prices down. We're really seeing it in a meaningful way now. Affordable new rental units are moving much faster and did so in quarter 3. Okay. So if you've got less than an 850 or 850 to 1049, those are moving much, much faster and are being absorbed into the market at a faster rate than those higher priced markets. Now going to, where is rental rate have a growing absorption rate? Like what regions would you see, more demand for rentals? Well, it's going to be the regions where there's less for sale existing home sale inventory, because where there's less existing home sale or new construction inventory, you have more competition, which pushes those prices up, which makes buying a home less affordable in those areas. And then people shift over to rent. The Northeast, of course, is the area that has the least inventory for sale, the hardest go at that. And that's the only region with a growing absorption rate right now. Okay. Northeast is growing versus South in decline, Midwest in decline, West in decline. Red number would be that 2024 number, the gray being 2023 absorption rate. So Northeast up over 65+%. Also, you see Northeast is the highest absorption rate, stands out as the only area experienced higher absorption rate than same quarter in 23, rising from 58 to 67. There's the New York City rental prices continue to climb and is pushing that, right? New York City, obviously pretty unaffordable. South would be down from between 55 and 60 in 23 to almost down to under 55%. The Midwest cooling from 23 over 60% down to almost 50. And the West was up over 70% now, under 60% there on those regions. If we take a look at just some of the metropolitan areas that stand out year over year, Atlanta's down 2.9%. This is 0 to 2 bedroom. Austin is down 5%. More inventory, more options, pushing those prices down. Denver's down 5.9%. Kansas City's up 3.1. Maybe a lot of Chiefs fans moving in for the 3P. I don't know. Memphis is down 6.7%. Nashville's down 4.4%. Another area where we've seen a lot of this new construction. New York up 5.3%. Okay. San Diego down 4.2%. San Francisco down 4.3%. San Jose, though, is up 3.3%. So there you go. More data on that, obviously linked for you guys inside of BAMX. All of the charts and everything is right inside of BAMX, so you can grab that very easily. One of the things we're seeing early on in this year would buck the trend of this Trump bump that people expected from November to today, the Trump bump of prices moving down. Okay, I saw somebody on X post about this. It's day 2, 3, whatever it is in the administration, and people are saying, hey, home prices haven't moved, or the home market isn't improving, but the stock market has improved. Why is the housing market not improving? Well, one thing that would buck the trend of the executive order is, hey, home prices here early in the year are continuing to rise. We'll see, obviously, what we talked about yesterday, what happens. I thought it was pretty vague, but we'll see if there's anything in terms of regulation that can, increase supply in a short period of time and move prices down. Right now, the reality is home prices are rising. For the ex bros who are saying, hey, the stock market's improving, the crypto market's improving, but real estate market's not improving. What I'll say to that in terms of sales, in terms of demand for real estate, you've got to give real estate it's a local, first of all, it's a local thing, not a push a button algorithm, buy a stock, buy a crypto, coin, whatever. It's a local deal. It's a longer, the information, Jerome Powell shouldn't need 2 years for lagging, data to come in, but 3 to 6 months. Why is Case-Shiller the gold standard? Well, because they don't deliver information for 3 months. Things take 6 months to work through in real estate, sometimes longer. And so real estate just takes longer. Right now, though, prices are continuing, which at the end of last year, there would have been a debate. Do prices get pushed down entering this year with where we were heading? But not the case. Prices in all major metros for the first time since 2022 are moving up. So this right here might be something for buyers on the fence. Okay. Listen, you wait longer in the spring. Do prices go up by the end of the spring or down? They always go up by the end of the spring. You measure them from the beginning of the spring market, whatever spring market, hot season market means for you in your local market. You measure it from the beginning to the end. Those prices move up. The fact that it's already taking shape here in the beginning of January, or the end of January rather, means the prices are going to move up in this spring market in most areas. And for the first time since 22, all major metros are experiencing that. So the number of top 50 major metros that posted year-over-year increases in median sale price is all of them. Okay, so we're seeing prices move down. Now that acceleration, that appreciation is decelerating in a lot of areas, and we've covered that here. But we are seeing prices overall, continue to move up. And so a longer the buyer is thinking about a rate or something that, somebody told them might be a good idea to wait, the more and more expensive that purchase is getting. You see now Atlanta just picking 392,000 median sale price, below the national average, 3.2% change. If we just go, who's the biggest gainer and biggest loser here? We see, not loser, but least amount of gains. You see Cleveland at 15%, Milwaukee at 14.5%, Philly at 14%, Miami, Chicago, Warren, Michigan, Nassau County, Baltimore, all with double-digit year-over-year median sale price gains, according to Redfin. And if we go bottom to top, Tampa, Jacksonville, Orlando, Austin, San Antonio, Portland, Houston, Nashville, Atlanta would be in that bottom category. Let me look at this. Tampa, Jacksonville, Orlando, Austin, San Antonio, the 5 major metros with the least year-over-year change in median sale price. Why? It's an inventory game. Those were the areas that had the most migration. And so builders flocked to that area. Builders moved in and said, we're going to build an abundance of inventory. And now what do we see? Okay, they've got the least amount of price gains, median sale price gains, because that's where you have the biggest increases in inventory is right here. Okay, so, particularly west coast of Florida and Texas. Those are the drivers of inventory. 40% of the active for sale inventory increase in 2024 came from Florida and Texas. So what people are seeing with an increase in inventory across the country, which still is under pre-pandemic levels as a country, it may be different for you in your market. And so being able to explain this macro conversation, these macro trends that consumers and your customers are hearing and seeing in a headline, and being able to relate them back to your micro is a really important connection connection point so that your customer doesn't think you're coming to the conversation salesing them or just saying realtor talk that you want them to, want to sell another house. I mean, here's the one of the things I'm so passionate about, and I'll be talking about these conversations with people at a listing appointment today at 3:00 in the New Way to Win More Listings webinar that we're doing at 3. Myself, Matt Curtis, and we have an expert from Zillow coming on. These conversations, I'm encouraging agents to really take the time to have that conversation, because the belief that your customer, your future seller, maybe even a client you've worked with in the past, okay, maybe even your relative, the beliefs that they have, you're not with them every day, come from what they're consuming on mainstream media and these headlines of what the real estate market is doing. And they have some form of a belief from the information. There's so much information coming into us every single day. They have some belief on that information. Now, is that belief that they have serving them well on their real estate transaction? Well, that's going to be determined by the level of education that you can deliver. Are you capable as a real estate professional of slowing down, connecting macro data to micro data, having stories and case studies in between those two to validate the case of what really needs to happen in the micro, and help them understand why their belief is or isn't serving them on their particular local transaction. It's really important stuff. And I just find as an industry, we've, certainly any agent that got in 2022, it's like everything moves so fast, and it's like, hey, I'm going to do this, I'm going to do that, don't worry about it, I'm going to take care. No, it's really about slowing down and being able to help them believe in what they're doing and help them understand the process fully and completely. All right, I want to understand what type of demand we're getting. I think we all do in this real estate market overall. Are we going to see more or less? This is the time of year where we would anticipate mortgage applications to move down. To move up. Mid end of January and into February, mortgage applications should be moving up. And so now that we're past those first couple of weeks, the holiday disruption, are we going to actually see that with the downward pressure where we're at on the rates? So mortgage applications actually did increase. This is the top line number. This includes refis, increased 0.1% from the week earlier. This is according to Mortgage Banker Association. It's not much, but we'll take it. If somebody says, hey, I got a $5 free bill to give you, I'm not going to walk away from it. I'm going to take it, put it in my pocket, and keep on moving. So I'll take the 0.1%. On an unadjusted basis, the index also increased 3% compared to the previous week. Refinance decreased 3%. Ooh, I like that. That means that there's more to be had on the purchase side, which is what we care about. And the seasonally adjusted purchase index increased 1% from the week earlier. Okay. Now we want to see this number start to jump up. We'll take it. Again, you're going to hand me free $5. I'll put it in my pocket, keep walking. I'll take this. I want the next corner of the street, somebody to say, hey, do you want a $50 bill? How about a 20? I want to see these numbers go up. The unadjusted purchase index also increased 7% compared with the previous week. And here's the one I care about the most. And I want to start to see a trend here as we move over the next 2 months. And I don't care if the rate stays at 7%. That's 3/4 below the historical rate. I want to see this number move year over year, because that means there's more demand, and it gives there a more realistic chance of existing home sales, completed sales, closings moving up in 25 versus 24. These are data points. These are early data points, but if they move up continuously here in a spring market, it'll certainly better serve the chance of more transactions happening. And mortgage applications did come in 2% higher during the past week than the same week 1 year ago. And so now we've got weeks. Now we're past the holiday thing and all that. We've got weeks of comparing to last year that are going to be relevant. And we're gonna pay close attention to that. Now, rates are still up above 7% as of yesterday's read. So we came in on Mortgage News Daily at 7.08%, exactly where we left the week before. And so even with this downward pressure on rates, to see mortgage applications moving is a positive sign. 10 years down, still under 4.6, down from where we've been trending at the top end over the last month. Where we were at the end of December, then we went up to 4.8. Now we're back into that 4.585 range. We'll certainly take that. Zero expectation that the FOMC in 8 days is going to cut the Fed funds target rate. In fact, that number has only moved up into more certainty that there will not be a cut. Right now at 99.5%, the Fed will not cut. They're only projecting 2, maybe 3 cuts out of the 8 meetings this year. As it stands today, we're early in the year, but we'll obviously pay attention to all of that. All right. Webinar today at 3:00, completely free. New way to get more listings. Links down below. I will see you guys there for those of you that can make it. The only way to get access to the replay, obviously, is so even if you can't make it, go ahead, sign up. You'll get the replay. That'll be, that and BAMX members on this one will be the only way to get the replay. BAM Pro Bowl, February 5th. If you're not doing that one live, there is no replay on that unless you're a BAMX member. So a little bit of a difference there, but that's bamprobowl.com for February the 5th. And we just, I don't think it'll be announced today. We just added a 5th speaker. You don't want to miss that one. That's going to be a huge announcement. All right. There you go. I'll see you guys today at 3 for the webinar. Until then, of course, toodaloo. Have a great day.